In trading, you write your own success story. You've got the power to make it happen. No more looking to get rich quick or hoping for shortcuts. So it's time to take charge and hustle hard to create your own success story. And remember, trading is not for weak people.
And we are at the opening of the bell this morning, and it is August the 26th, 2024. And I'd like to welcome you guys back to Wealth Wise Guru. And I'm your host, John Shaft. And this is going to be a exciting and anticipating week. For on Wednesday we have the earnings call of the bidder due to come out at the end of the day, and everybody is riding on the back piggyback riding on the back of the bidder, hopefully and expecting for it to do well beyond expectation. And I am also heavy invested in the bidder, and so hopefully she'll do well. I still have several positions in the bidder, including option trading and and also equity trading. So let's scroll down this morning and look at the portfolio and see how she's doing. And so far, I think I closed out last week at about 30,000. And so this morning she's up $800 so far, and starting out at $31,106. So she's making some kind of gain. Looks like I have a buying power of $3,282.18, and I have a warning signal, which is due to me having a margin account, and it keeps popping up simply because a couple of weeks ago we had that pullback in the market, which caused my portfolio to saturate and lost some value. And I'm trying to regain that value that I had lost. And sometimes I get eagerly in terms of wanting to buy more stocks, or either put in different strategies. But as you can see, the market is still very volatile. The market this morning is going back and forth, and you see those warnings coming up that you see right now, S&P warning, things like that. Like I say, if you want to do an option trading and you do not want to execute on a particular strategy, you can just add that particular strategy to your watch list, and just watch it over a period of time. And then once it starts to gain significant value, then you can decide then whether or not you want to make the move and buy in on that particular strategy. So let's look at the warning call and see what we got this morning. If you just starting out in the market, like I said, and you're gonna start out with a cash account, so you don't have to worry about things like this. This is later on down the line. If you start out with a significant amount of money in your portfolio, you have to simply qualify in order to have a margin account, and you have to have at least $2,500 in your portfolio. And like I said before, they will match you per dollar what you have in your portfolio. So if you have $2,500, they're gonna match it $2,500. And if you have 5,000, then they're gonna match it 5,000, and so on. And they do this for small accounts. It helps you get big and gain value. If you are able to start out with a margin account, you can change it out to a all cash account simply by selling out or closing out all of your positions and giving them a time to settle, and that's usually 10 business trading days. It's best if you could start out with, to continue with a cash account. A margin account, yeah, it means that you have to share your wealth with the particular broker that you're investing with, and you can have you can get a margin call. You have a margin status update, which is what you're looking at on the screen. What I have right now, even though I have over $3,000, I still have it. So let's look at it for right now. See what it's saying. It wants me to. I can simply get rid of this just by depositing another $3,700 into my account, or you can sell off some positions. If you sell off some positions and it covers that $3,700, then that would get rid of that margin call. Or you can simply wait, especially when it's a new day like it is today. You can simply wait to the end of the day and see if your portfolio is going to go up in value. Or if it goes up in value, then that warning call would simply go away. And right now I'm up about $1,000, so we're gonna wait. So don't let that bother you if you do have a margin account and you see such a warning. And like I said, we had a big week this week waiting on the earnings calls from NVIDIA, and I put a put in NVIDIA over the weekend, and that put is for August 30th. Let's take a look at it. And I put this in because you never know which way a particular stock, you never know which way a particular stock is going to go after its earnings call. So if it goes down, I would in turn make a profit just as well. In this particular strategy, I think I would make about $10,000 if it decides to go against what we all are expecting. So I would make something off this, even if it went down. It's called a put. So I actually have two positions in a put. Let's see, this one is dated for bought at 8/26, and expiration date is 8/30. So after the earning call, if it doesn't go in my favor, and it goes, either way, it'd be going into my favor. But just say if I wanted to get out of this position, I just simply hit trade, I can either sell it or I can roll the position. And you click on roll position, and then you just simply click on a new date. So that this one was for August the 30th, where you see it highlighted at the top here. And so you just simply go up to the top and click on a new date. And so let's say we went out another 30 days, say October the 4th. You just click on October 4th. Then that will come up. This is the current price right now on the dividend. It's continually to rise. It's at 130.32. Before the split, this stock was way over. I think it was $1,100, and then it split it. And then once it split, I think it started out at I think 120 or something like that, and then it went. Then it had a call back where it fell down to like I think it was like 96 or something like that, and then it went back up to 110, 120. And so right now it's at 130. So this is a very vital stock, and it's just like this is like Tesla was back in the day, 4, 5, 6 years ago. If you guys remember, Tesla was the same way, and I was a big heavy hitter also in Tesla, and I made quite a bit of money too as well in Tesla when Tesla was on top of its game. So this is the Vitidus is the new Tesla of today. And so if you wanted to roll out of this position, and this is a put, so it's going to be the strategy is going to be in the opposite directions of a call. Anything below the striking point, which is 130.48, is going to be out of the money. Anything above it is going to be into the money. If it's a call, it will be just the opposite. Anything above it would be out of the money, and anything below it would be into the money. And your best bet when you're making a put is to go out of the money. So I'll just simply go scroll down and try to pick a particular striking point that I think might be better than the one. If I want to roll this position, I would just simply hit that position there, and let's look at it. It has a volatility of 64 or 65.07. That is the theta. Mark call is 8.15. Trading right now at 8.20. Previous close was 7.78 and high is 8.45. Low is 8.20. Chance of profit is 33.87. Volume right now is 8, and interest is 82. Volume 8. That a volume means that it's currently eight positions that has a contract on this particular strategy, and a contract is just it's a contract between you the buyer and the seller, and so you have 8 sellers that has committed to this particular contract. Then you have another 82 sellers that are interested in this contract as well. So over a period of time, this is actually can grow. As you can see, it already grew. See, it already jumped up to 13. And then this is at 82. It comes due 10-4. The theta is at 38%. I mean the delta. The delta is at 38, and the theta is not too high. The theta, you have to watch a high theta. If you have a high theta, then that means it can eat up at your profit. And the thing about rolling out a position like that, you just quickly hit roll, and then you'll change the position, or you'll change strategies, and that's if the this particular strategy that you initially started to go against you. And so right now it's too early in the game for me to make such a call. So, and then again, if it goes against me, and and I get the sign, then I actually get a sign uh, disposition of these shares at $108 a share. So that's a win-win for me either way, because I actually be buying it at a cheaper price. Then I can in turn uh, uh, sell it off because I own those shares. But a lot of times you have to be careful with positions like this, and that I done had it happen to me twice, to where I was pre-assigned some shares that I put in the S&P or Y 500. So if you get pre-assigned, you can get pre-assigned, and you can get shares. So for instance, so you can get shares like $55,000, 55,000 shares. Those shares can be worth like say $30,000, $40,000, and you need an additional $27,000 to hold or keep those particular shares in your portfolio. And and if you don't have it, then you'll look up here. You see this warning sign saying that your account is predicted. And so if your account become predicted, then you won't be able to move or close out any other position until you satisfy this prediction warning call. And you don't panic or anything like that. You just simply in most cases, if you have the money, then you just deposit the money, then you can keep the shares in your portfolio. And then you can turn around. And sell it for a profit, or you can keep it and just continually to grow it. But if you get one of these calls and you do not have the money, you just simply just sell the position, and then the amount of profit that's going to come to you is going to be a deposit into your portfolio. Mine was valued, I think it was like 200 like $55,000, and I had to have like $27,000 deposit in order to keep that particular strategy, to keep those particular shares. And so I end up just having to sell out of those positions, and I still had a profit of $10,000. And you are listening to another episode of Wealth Wise Guru, and I'm your host, John Shaft. And as you can see, I have like 12 different option strategies position currently in effect. I have about 3 puts in the bid, and the rest of them are calls. Some of them is in the red this morning, then some of them are in the green. So I don't let that bother me. When it's in the red, that just means that it's a buying freezy. This one here is at $2,800. So normally what I would do, I would close out the position coming up on earnings call. And the last day I would have to close out a particular position for an NVIDIA would be at the closing on or before closing on Wednesday. And as you can see, some position in the NVIDIA, this is currently at $10,130. So if I wanted to close it out, I'll just simply hit trade. Then I'll simply hit sell. And so this is 10 positions. I would simply go up top here. Or if you did not want to sell all of them, you just click in the number that you want to sell. So if I was to sell all of this, I'll click in 1, then 0. And then I will go around here and then click in 1, 0, 1, 0, 0. And this will be my credit, be $10,000. And so yeah, I'm not ready to do that just yet. I want to at least give it another 2 more days and see what the bid earnings is going to do. Might say I'm being a little greedy, but yeah, I'm trying to make some significant gains with Nvidia. So let's scroll on down and see what the rest of the portfolio is doing this morning. Tesla is in the red at $969. Then I have a little over 62 shares in American Airlines. American Airlines is my airline of choice. Airline stocks right now are very cheap, so you can own quite a bit of American Airlines and get it at a pretty cheap price. As you can see, it's $10.43. Over a period of time, guys, these companies are all going to come back, and they're going to come back in full effect. And these stocks can be $200, $300, $400, $500 a share. So right now it's a time to buy. It's a bargain. Get this stuff at a cheap price. This man, because you get one of these shares like American Airlines, it goes up $200-$300. It can cost you between $10,000 and $14,000 just to own 100 shares of it. So everything right now is on sale at low price. Even Meta is down this morning. Formerly Facebook, it's down to 1772. And Meta platform, it's also a great stock to have in your portfolio. And so you have a lot of different strategies when it comes to investing in the market. Google right here, I have $17,349 current position in Google. This is not even an option. This is just a regular stock, just a regular trading stock. I have $17,000 into Google. Yeah, I'm in the shares of that. Okay, that's 104 shares. So actually, I can turn around and sell those shares for even greater profit if I wanted to. And we got a little red, but more like a lot of it this morning is in the green. And you do option trading when you do not want to, or you do not have the money to pay the full price for a particular share. Then you can do options, and actually you can make more money doing options than you can just sitting and waiting for a standard stock, to invest in it, and then for it to go up in value. It takes time for a stock to grow up in value. It's not a quick get rich scheme. It's not an overnight get rich scheme either. It takes time, but that's the beauty of doing option trading. option trading things happening quite quickly. Just depends on the company you are investing in and the particular strategy that you're using. I have about right at 200 different strategies in terms of standard tradings in my portfolio. And dealing with option trading, you have many different. Oh, it's down to the point. It went down $148. So I don't let that worry. That's gonna mess a lot of volatility still. The market is gonna fluctuate like that. But you can also do credit spreads. You can do debit spreads. All kinds of things you can do when it comes to investing in the market. Let's see. This is Alphabet Class C, trading at 167.79. Say you wanted to do a credit spread on this. Credit spread is a whole lot cheaper way to actually get into a particular option strategy without having to use a whole lot of money. So if you don't have a whole lot of money, you still can get into options and make a significant profit. So if you want to do a credit spread, you go up here and click the particular date that you was interested in. And this is going to be a call, and the put is working the same way, except in the opposite direction. This is a striking point. It's a call, so anything above it would be out of the money. Anything below it would be into the money. So normally, if you're going to go into a specific position, oh, this a put. Okay, hold on, I got to put. See, that's why I say you got to always check on the top there where it say buy, buy put. You make sure you click on what you want. That's makes a significant difference. So now we're to what you call a call, and you buy a call when you are expecting for a particular strategy to go up in value. Well, if you're expecting for it to go up in value, you buy a call. And if you're expecting for it to go down in value, you buy a put. Or you can sell a call and sell a put. And the difference between buy and sell is buy is you buying a position because you did not own. But when you buy a position, you got to have collateral to cover that particular strategy, and you usually have that collateral in terms of money. So if you want to buy a call, then it's going to cost you some money in order to get into that particular position. But it'd be a whole lot cheaper since you're doing option than doing the regular standard trading. If you sell a call or sell a put, which is at top here, sell a call or sell a put, that means that you have to own at least 100 shares of that particular company in order to sell it. If you try to do it, then the system is going to reject it because you do not own enough of shares. And you have to own at least 100 shares. So 100 shares just pretending on depends on what company it is. Could be if you're doing regular standard trading, it could be very very expensive. If you're doing option trading, it wouldn't quite cost you as much, not even maybe a third of the price. So that's no reason why a lot of us do option trading. And like I say, if you wanted to do a credit, you can do a credit spread, Instead of you pressing on the regular uh, position. Why the screen keep going blurry like that? But instead of you pressing on the regular position, which would be right here, you would go over here and press plus sign. Like the plus signs, let them know that you are intending to add another position. And so you just scroll up and see what other position that you would add. And so what I usually do is go one or two up, and this is a protection clause. Just in case I do not hit one position, I will protect it by another position. This is called what's called credit spreads. There's two options, and then you can also this will be out of the money, and you can also scroll down and hit two more. You can hit at say for instance at this number here is 160. Then you can scroll down past that and hit another number. So this is four position. I'm not going to implement this. I'm just giving you an example of conducting different strategies when it comes to trading in the trading options. And this will be significantly less money in order to cover this particular position. It probably won't even cost $100, but you can make a gain out of this. You can make a gain out of this, say $1,000 or more. This depends on the position and the strategy that you are using. And you can also do this in what's called a debit spread, or calendar spread, or vertical spread. It's all different kind of position you can use when it comes to trading options in the market. In each video, I try to give you guys an example of what you can do and how to do it. I usually try to limit it at those teaching points, because I don't want to give you guys too much when it comes to especially doing option trading. A lot of different strategies you can use. So sometimes you can be overwhelmed by so many different strategies. So in order to learn and want many different other strategies, you just have to tune in to more of my videos. And you are listening to another episode of WealthWiseGuru. Boy, this is really has a lot about till this morning. It's down now to 29,000. So I don't know why it's crashing this morning, but woo. So hopefully you will correct yourself and go back up in value. But don't let this kind of stuff bother you. It's just a market simply correcting itself. Like I said before, these are companies that you are dealing with, and we as retailers, individual investors, we do not have most of us do not have the money or the income to keep up with these particular stocks. And so if they didn't correct itself, then we will be actually priced out of the market. Like I said, though, we are anticipating the earnings report, NVIDIA, coming out on Wednesday, August 28th, and 2024. And then next month we have we are expecting for the Feds to reduce the rates, and that should those two particular those two particular events will should send the stocks soaring. Look at the S&P Y 500 right here. See what she's doing. Trading at right now 562. So if you like I said, if you are new to investing in the stock market, the S&P or Y, S&P or Y 500 was definitely where I would start at, and having the also having the Magnificent Seven in your portfolio would be a good thing to have as well. As you can see, the S&P Y 500 has just about uh, every company within it, including technology at 32.69%. Healthcare is at 12.18%. Communication service at 8.9%. Consumer defense at 6.1%. Utilities at 2.5%. Basic materials at 1.9%. Financial at 12.58%. Consumer critical at 9.85%. Industry at 7.46%. Energy at 3.49%. And real estate at 2.33%. So if you're not comfortable trading individual stocks, as I do, you can just do regular equity trading and invest in the S&P 500. Invest in the S&P 500 and having the Magnificent Seven in your portfolio. And believe me, you will not go wrong with that strategy. Let's see. See, this is a put position. And since the market is going down this morning, then my put position is starting to rise up. And right now I have made $17 off of this put position simply because the volatility and the bit of the, so I make money whether the market is going up in value or whether the market is going down in value. So right now this particular position right here in the bit of the is it has a 129.74% vitality. That's a lot of vitality, boy. And it has a volume of 1,076, which means that's the current contracts, and it has almost another 10,000 interested in this particular position. Look at it. The data is high. Wow, the data is at 1. That's 10.38. And I mean the delta, and then the theta is low. So you have a lot of people betting on this particular stock to actually go down in value. They betting against it, and so I'm already invested into this. So you don't need me. I'm just looking at it, showing you guys an example of a put. So I make money whether the market is going up or either whether the particular position I'm investing in is going up or going down. And so you invest in the market, boy. I tell you, it's based on strategies and actually a game of chance. You never know which way these companies are going to go because we do not have insiders traders tip to tell us what's best for our particular portfolio. And if we did have that, you could we brought up on some federal charges. So You definitely don't want to go that way. So let's look at the other app here. It's called ROI. Go well with your uh, investment portfolio. It gives you a better outline of what your portfolio is doing. It goes well with just about any investment strategy that you might have. So right now, my net worth this morning has failed. It's down to 139,000, which are 23,000 in gains today. I have 85,879 in stocks. I have 175 holdings. I have 31 holdings are into ETF, value at $4,714. And I have options. I have another $46,476 in options. And as you see, I'm not a big trader in crypto. And like I said, if you want to add this particular app into your with your investment app, give you a better outline and outlook of your particular portfolio. Then you can also invest in top famous people that are invest in the market. You can invest wherever they have in their particular portfolio. You can also have this in your particular portfolio. You just click on the name of your favorite investor and see what they're doing. So we're going to look at Warren Buffett, number one trader in the world. And we look down here and see what Warren is investing in. And he has 42.2% in Apple, Bank of America, American Express, Coca-Cola, Chevron, Occidental Petroleum, Kraft Heinz. And these are all different companies, different positions that he's currently investing in. And so if you want to have these in your portfolio, you just simply hit invest, and then the type of amount, the amount of money that you want to invest. I think the least amount is $20, and for me the maximum is $1,400 or $1,600 that I have actually available. You just simply type that in, and since this is already hooked up to my portfolio, it will just automatically get sent to my portfolio, and it would execute this particular strategy, and then I will be trading the same way I have the same different strategies in my portfolio as Warren Buffett. Either Nancy Pelosi, which is the congressman, House Democrat. She trades well in the market as well, and this is how she has become so wealthy in Congress by trading in the stock market. Well, that's going to do it for today's video. Look at the temperature check. That's going to do it for today's video. We're going to be checking on it from time to time this evening to see actually what is going on. And I might decide to sell out of a position. Like I say, earnings calls are coming up. So, man, this thing is acting really kind of goofy this morning. But either way, we're going to close out this position because I really don't know whether this is getting a correct reading or not. So the app might just be updating itself. I don't know. But this is Wealth Wise Guru. I'm your host, John Shaft. Hope you guys had a happy and prosperous day in trading. Again, we are at the beginning of the week. August the 26th, 2024. And again, we are expecting for the earnings report to come out on Wednesday for the dividend. You can either sell out your position and and then get back in it once the you get the report of your earnings call, or you can just simply ride this thing out. And we will see you guys again in the next video upload. Again, we thank you for watching. Hit the like button, share button, and subscribe on the way out.
When you first get into trading, don't tell anybody that you're trading. Don't tell your family, and don't tell your friends. Do not tell anybody. There is not a single person in this world who understands trading like a trader. Only a trader understands the patience and the discipline required and how much time it takes to be successful. Every single person around you is going to say it's gambling, that you're risking everything, and that it's a waste of time. But great things take time, so be patient and keep going.